Active management is particularly important in healthcare because of the absence of a great proxy for innovative drug companies in healthcare. There are over 500 biotech companies, most of whom will fail in the development of successful drugs. So it's not sufficient to own an ETF or passive exposure to the biotech and healthcare industry. It is far better to be able to stock select within biotech so that you can discern the winners from the losers. We have observed over the last 2 decades consistent variation in performance from those companies who are successful at fundraising, developing new medicines, and either growing to become a big company or selling the company to a larger one over time. And as I said, unfortunately, most companies fail to do this over their life cycle, and so avoiding such companies is really important to enhancing returns. Healthcare valuations have been under pressure for a couple of years now, and that pressure has seemed to accelerate with all the advances in AI and AI's impact on various sectors. I think for a long-term investor, healthcare is attractive right now. Besides AI, I think another factor guiding healthcare underperformance recently has been policy uncertainty and a little bit of regulatory uncertainty as well. I think those are a constant in healthcare. However, we see less risk in the coming years through the next election cycle in general from drug pricing concerns or regulations in other parts of the industry. Yeah, healthcare has been under historic pressure because of AI and some dynamics post the COVID pandemic that have led to accelerated utilization of healthcare and cost pressure. But we see going forward the gradual benefit of AI to healthcare in drug discovery and the delivery of care. And in particular, we are hopeful that a very robust innovation environment will help the performance of biotech, pharmaceutical, and medical device stocks going forward. Yeah, as always, going back to the innovation environment and the quality of the new medicines being developed, we really think that drives value appreciation in healthcare over a cycle. But what is interesting right now, besides the AI dynamic, is the pressure on the largest companies in healthcare to replenish their pipelines. This comes in the face of some pricing pressure, but importantly also patent expirations that have and are going to continue accelerating for the largest companies. So the need to replenish pipelines, build a portfolio of important new medicines is very acute right now, more so than in the last decade. And we expect biotech acquisitions to continue going forward and benefit shareholders of the fund to the extent that such companies are a part of the portfolio. Yeah, I do think that policy and regulatory uncertainty can create opportunities in healthcare and especially biopharmaceutical stocks, and we see a lot of that uncertainty creep into valuations today, and it can be an opportunity for long-term investors at such times. I think the other interesting thing happening right now is further consolidation in the biopharmaceutical industry. So we are at a moment in time where the largest companies are facing patent expiries on much of their portfolios. And one important way to address patent expirations of existing portfolios is to increase R&D, but also to acquire smaller biotech companies. And so the healthcare fund has benefited from this wave of consolidation, and we expect that to accelerate to address growth challenges of the biggest companies in the decade ahead.